In 2008, Hank Paulson reportedly got down on his knees and begged Nancy Pelosi for the bailout, if you remember that, right?
There will be no cash in the ATMs by Wednesday.
No cash in the ATMs, no cash, tanks in the streets. He was worried about credit markets breaking down and then supply chains breaking down after credit markets. Much of Wall Street is sitting there looking at credit markets going, okay, a little bit of strain, but not too bad yet. But the supply chains were broken starting before this thing. You know, but it was hey, the China stuff was broken, right? But there was not really there were problems with the food supply chains, but there were not problems with a capital P with the food supply chain. And now there is. And so I think we're seeing the crisis work in reverse, where this is not anything like the last 40 years anybody's ever seen, and so they're not thinking about it properly, which is you've broken the supply chains first. You're going to have a credit crisis because the supply chains broke first. It's not going to be, we have a credit crisis, we have to stop and paper over before it spills into supply chains. It's going to work the other way. And so I think actually you're seeing nations that are saying we're stopping exports of grains. These are the people that don't have any margin for error. I'm going to get thrown out of office, and that's the happy ending. In some places I will get, killed, literally, if there are food riots, etc. in my country. We're done here. We're not exporting as much. Either they slow exports or they put export taxes on it. They do something to restrain the outflows of grains. And so everybody starts doing this. These are people that are acting with a large margin of error, right? They don't need to day trade and get every last point out of corn. They just, boom, we need to make sure we have it. And so I think this is the leading indicator of this crisis, where as the recognition in credit markets dawns, you're going to have inflation continue to rise. And as you have inflation continue to rise, the supply chains break down, you're going to have this reinforcing mechanism of my fiat currency doesn't buy me what I thought. My fiat inflation, bonds, sell my bonds. I need to. And once that takes place, and I think it's starting to, central banks are going to have to, they're going to have to either stand aside and let this credit crisis evolve. And what's going to be really unique about this, in my view, is that in the West, it's going to look a lot like an emerging market credit crisis, where yields go up even as stocks go down, asset prices go down, unless the central banks come in and cap yields and say, listen, all right, fine, 10-year Treasury in the U.S. isn't going over 2.5 or isn't going over 3 or whatever. They will, we're doing QE, we're going to do some sort of yield curve control. And there's already calls out there, it started last week, for some sort of Treasury liquidity facility from the Fed. It's not QE, it's a Treasury liquidity facility. It's the same thing. Because the Treasury market, the deepest, most liquid market in the world, not trading like the deepest, most liquid market in the world. You're already seeing these strains again, similar to what we saw in March of 2020, when the Treasury market, after 12 days of an equity downturn, crashed alongside stocks, which had never happened in 40 years. It was a huge, huge warning signal. It's flashing yellow again. And so I think what we're looking at is ultimately this crisis spreading from supply chains into credit markets. And then from there, the central banks, the Fed, are going to be forced to increase liquidity, increase balance sheets into an inflation spike. And that, I think, is going to be sort of the crisis that forces these politicians. First, I think, midterms here, I think the Democrats are going to all get thrown out. Anyone that can get thrown out of office, I think, is going to get thrown out of office at this midterms. And then you're going to bring in a new group of people, and will they get the message of like, hey, inflation's going crazy, what do we do? And Fed's going to go, look, Treasury market's not functioning. We have to keep doing this unless you want rates to go up. In which case, okay, it has to come from policy. What's the policy that's going to fix this? All right, somebody call the energy guys. What do we got to do to get gasoline back down from $7? We need to drill more? Okay, let's do that, right? I mean, you get the right group of people in there, they'll be, as a friend of mine says, they'll be drilling in, Thomas Jefferson's nose on Mount Rushmore, right? Right? But until then, it's just the way our political system works. Until there's enough political pain to elicit a response, here we are.